thing is like $8 billion, give or take, or $1 trillion, excuse me. So the question then becomes, well, why and what will be that mythic thing that society says, yeah, we need something to use as a store of value because we need something to back our currencies in all of our countries around the world. And the real issue to that, real answer to that is there's no better alternative than Bitcoin today. Whether it will be there or not is obviously an open question. Everyone who says it's obviously the war is over and it's done isn't doing math, because if the war is over and it's done, then it would be trading at $500,000, not at 45. So the reality is the war is not over, but Bitcoin is an option. And you've all heard me say this. It will trade is based on the likelihood of it becoming a globally accepted store of value. Now, ask yourself a question.
True.
Is having the world's richest person and several S&P 500 companies invested in Bitcoin as a store of value make it more or less likely to become that store of value? And the answer is, of course, yes. And so that's why the price went up. It is nothing more, nothing less than that. And now, obviously, there's supply-demand dynamics here that are rather extreme that we'll talk about, but it's really important to understand you're trying to get to a point where you get to social critical mass.
All right, so
guys, hold on. Before we pass it over here, I need to make an announcement. We are officially live on YouTube. If you look in the chat link there, feel free to share it with your social. We're going to start doing this. We're going to just live stream this, Mo. The reason why is because there's a lot of people that just need an objective opinion. There's, this is unfiltered. We say how we feel. And a lot of people have been asking for me to bring back Genius Wednesday. So I'm excited. So let's just stream this from here on out. So if anybody out there is listening, have any questions, reach out to us at the end. We'll tell you how we can, you guys can get a hold of us, whether it's on Twitter or Facebook, whatever.
Just remember, Jeremy.
So anyway, Josh, go ahead.
Yeah, unfiltered genius equals divorce. That's all I'm saying. But putting that aside, I'd like to get the group's thoughts on the publicly listed Bitcoin miners, who've also been having some amazing gains and some volatility. So, if I look at Bitcoin, and I know that David is going to say it's not the price of the Bitcoin that matters, it's the market cap, go and buy yourself 5 Satoshis, and that's fine. Nonetheless, if I look at the way Bitcoin's going, currently Bitcoin's, I think, at like 46,000 or something like that, 45,000. For that to double, it's got to get up to 90,000. Okay. At the same time, I could buy a share of Riot, I could buy a share of Marathon. That may double overnight or over a week in this case. What are the thoughts? I mean, is it going to be something where the miners almost have to ride the coattails of the price of Bitcoin, or is it something where there's, more that you can get in the way? Because the thing about these companies, it's really amazing. I think Riot's got 10 employees, something like that. There's not really a lot of operational stuff here. They bought a lot of fast ASICs. They've got cheap power, go. So is that a more viable investment for some short term? You're not going to hodl it for 5 years? What do we think?
Well, my answer is simple. There's math, right? At the end of the day, you'll see in moves in the underlying, i.e. in this particular case, Bitcoin and other mineable coins, you will see momentum move to where miners will either be above trend or below trend. It's actually not dissimilar to gold miners. If anyone remembers back in ancient days when dinosaurs walked the earth in 2012, when gold went on its first bull run to get to 1900, the miners, things like the GDX or
they went ridiculous.
We're trading it. It was trading at almost double where it is today, and gold is back at the same price. So the point is that when there's the miners will trade or tend to trade not just on the price but also on the acceleration because of that imputation. So it's a question of how one looks at it, and if you understand what I mean by that. Now, that said, I have not done the analysis. I don't know if Riot blockchain is a better buy if I believe, as I do, that Bitcoin will get to 140,000 within a year. I don't know whether it will go up more than the 4x or 3x that I think Bitcoin will go up. I do not know. I will say that it is absolutely something that people should look into if that is what their viewpoint is, because there's always a better way to make money when one has a viewpoint. And it absolutely will be dependent upon their profit margins, etc. Can they grow, right? There is a global ASIC shortage. I don't know. I don't know how there is. There's a global ASIC shortage.
It's funny you mentioned, because that is actually the biggest distinction. I mean, there's two things for the miners that count. What ASICs do you have? What access do you have to get more ASICs, and how cheap is your power?
Mm-hmm.
I mean,
it's true. I mean, look what's happening in the mining world right now. I mean, these devices are sold out everywhere. You know, I have guys that were mining 3 years ago. Dustin, one of our guys who's been on Genius Wednesday before, and you can't find one anywhere. And he's selling his stuff that's 3 years old, which typically gets devalued over time, obviously, because there's newer hardware. And he's selling it for 3 times the amount he bought it for. So, I mean, it just goes to show, obviously, what's happening in that space right now. But kind of going back to what you were saying, David, you know, one of the arguments is, why not invest directly in the asset itself versus a company? Yes, it's about diversification, and I get that, obviously. And I'm a firm believer in that in my own personal accounts. And this is not financial advice, obviously. But you never want to put all your eggs in one basket. But I will argue, though, that there is the potential for companies that are exceeding the yield of Bitcoin at this particular time do have the potential for also, as Bitcoin goes down 5, 10, even 20%, to go down even further than that. Yes. So I think there is inherent risk associated with diversifying.
It's higher leverage, effectively. Yes, Steve? I love that you raised your hand. It's so polite.
Yes, Steve Kwan, please.
I got a couple points, and I guess when I hear people say, well, Doge was started as a joke, or why is it up? I could say the same thing. Why is Bitcoin? I mean, it's just an alphanumeric set of numbers and letters, right? I mean, they're technically speaking, and I would say this. Somebody said, well, it's unlimited. I go, let me rephrase that. Doge is limited by year, but the years are not limited. I'll point out another popular project that actually followed their model. It's called, what is that smart contract thing? Oh, Ethereum. It's the same exact model. It's limited by year, unlimited by, limited by year, but the years are not limited. And I want to point out something also. I'm going to be the downer on this. The smart contracts, basically the dollar tokens or stable coins that are linked to ETH, are, if you're moving from an exchange, and this is from firsthand and from other people I've talked to, because the price is moving so much and the velocity of the DeFis and everything that's trying to move through their blockchain, if the exchange or your wallet is not keeping up with the transaction fee, I have transfers of USDT, that's a stable coin, that's the symbol, and it's unconfirmed after 8 days. USDC, that is unconfirmed after 6, and I had BUSD. Now, there's about 40,000 other people that have been in the mempool as long or longer than I on the USDT one. And I just think it goes to show that, yes, Ethereum is a game changer, and I'm not bearish Ethereum. I'm simply saying that at some point, the cost of the actual people using it versus me, I buy it, I put it in a wallet. Like, I'm not using the smart contract portion where I'm just looking at the outright return. When these start outpacing and people telling stories of waiting, a week, that's a big deal. I mean, that was what drove a lot of the altcoin season really in late 2017, where the Bitcoin network got really, really, really slow. And it's like, well, at that point, the question was, what can be faster and more efficient than Bitcoin? But I'm not knocking Bitcoin. It's like, it is what it is. It's a commodity. It's whatever you want it to be. But Dogecoin's community, they've been around for a long time. I mean, you guys have heard me for years. Hey, it's worth a trade. I mean, it's highly liquid. It's 1 Satoshi wide. And then you get into a situation like this where you have the world's wealthiest man saying, I bought Bitcoin, I like Dogecoin. Think about in the equity world when you see, oh, Carl Icahn just bought 5% of this. Does it go up or down? Or Warren Buffett likes ABC stock.
Yep.
You want to short ABC stock then? like, I just think there's two, at this juncture, like with Doge and Bitcoin, I'm either flat, I don't really short, but I'd be flat or long, because the charts, once something breaks to all-time highs, well, in dollars, I don't think Dogecoin broke it in Satoshis and versus BTC and versus USD, but I would say that it's approaching the market cap of one of its peers, and
Yeah.
it makes Litecoin, Dogecoin was the original pair I traded.
So I want to jump on a lead that Steve Kwan just accidentally gave, but it's been relevant over the last week or two for me, which is layer 1 versus layer 2 settlement systems on the Ethereum blockchain. Because what you described in terms of slow transactions and high gas costs, and the world has been complaining about this for well over a year. It's like, yeah, the chain's slow, the chain's expensive. And that's kind of what it is. And yeah, there's discussion of version 2, and that should make things better. And yeah, that's what that is. But meanwhile, for all the different dApps out there, and many of them have their own tokens, they need to function, and they can't do it on the Ethereum chain. So you've got a few things that people will do instead. You could be like Wax and build your own version of EOS.io, and that's kind of what they did. But more and more of them are working on side chains. So I had somebody, for instance, talking about Matic yesterday.
Matic.
Matic, exactly. And the thing is, it's a viable solution. The folks who were talking about Matic were thinking that they were going to actually switch to Cosmos, but it turned out that Matic is actually good enough, and they're sitting hold up, not hodling, but hold up until Ethereum V2 drops to see where they're going to go. Aave is another one that major DeFi protocol that's doing extremely well. It's sidechain oriented, and there are sacrifices to be made by being a sidechain. No question, your security is not as good. Your smart contract functionality may or may not be there, but your transaction speed is actually viable, which right now on Ether it's not. So the question becomes, what does that do from a trading perspective in terms of those secondary platform type tokens? Because there are a lot of them. I mean, there are probably 40 or 50 of them that are legit projects that are chasing that, and I don't know how that breaks out. David, I don't know if your system sees anything on the second layer tokens and you keep track of that at all, but I'd be really interested.
Well, I mean, look, first of all, our clients trade hundreds of different pairs. So, we have, I personally happen to watch, and we either trade or we're not a trading firm, we're trading software. So we know the value of them. And we watch when people list new coins all the time. And so we're constantly adding and tracking. I personally find it fascinating. Ethereum gas prices get where they are, and what do you see but Cardano, which I don't think has a whole lot of use, but the reality is they have a chain and it's pretty good, and a lot of people like it, and they think it could go do something. It's moved from 15 cents to 90 cents.
91 right now.
91.2610 bid, yes.
Well, you have a better system for tracking that.
See that negates your whole argument, David, because that's one of many things that I was holding, right, for 3 years, and then finally got over it and sold a bunch of this crap, which is now mooning this minute.
Well,
by the way, that happened.
So if you do hold even the shit coins for 5 years, there is a potential.
No, that's not a shit coin, dude.
It's not about, no, understand that the thesis that I was talking about that Ari made isn't about picking winners or losers or saying it's bad. He said you need to monitor it. So if you were monitoring Cardano over the last 4 years, you will know that while there were many early disappointments, they have actually been delivering technology recently. True. And therefore you would have been inclined to do the opposite, to double down on it, or to have sold it earlier and then bought it back. But that's besides the point. I'm not trying to be combative.
No, it's all good. I had to pay for my NFT addiction. So
no, it's fine. It is what it is. I mean, there's others which people like that haven't moved, but actually have had more adoption. VE Chain comes to mind is one. VET is another one that, it has not moved as much. It's moved from 2 cents to, 3.4 cents. So, it's up a lot, but in percentage terms, if you were in equity, it would be up a lot. But in crypto terms, it's like, what the F, people are like, well, it should be more. I don't really care. I mean, Polkadot, which I was talking about last summer at $4 and $5, is at 23. and so it's more or less had a similar move to Cardano, and so those are both quote competitors. The thing is, it's not zero sum, and that's something some people have to understand. That the reality is the use case globally for what smart contracts will be as a part of our financial economy in 20 years is such that every one of these things could be extremely could be mega caps. That's the reality. Whether they will get there or not is completely unknown to me, and it might very well be that the biggest mega cap of all may not have been invented yet. Just like if you looked in 1999 at all the search engines out there that were going to power internet v1, the biggest one didn't exist yet, i.e. Google. And if you looked in 2000 as to what was going to be social media, Facebook was an inkle. It was nothing, right? So look, the reality is we don't know if we have the best technology, and that's Ari's point. His point is stay on top of the technology, see what's getting communities, and remember, also it's not about the best technology. It never has been. It's about the best technology plus community plus use plus product market fit. So we always come back to the old is Betamax versus VHS back in those days, and then CDs and and then DVDs versus Blu-ray, and then ultimately they all get blown away by Netflix and by streaming because nobody cares anymore, and you can download it, everything, upload it all to the cloud. But the reality is the pace of this stuff could be breathtaking. My whole point that I was making earlier is you just separate all of this and you basically say, okay, we got two things to talk about. We got the global monetary system, where we're talking about there's a more obvious need than ever for an alternative to government-controlled currencies to create sanity in a store of value, to hedge against monetary printing run amok. And then you have Internet 2.0, call it what you wish, the new digital economy and all the facilitation of the digital economy. Now, clearly, the rise of the digital economy makes a digital asset more likely to be the next choice for a global store of value. So it does influence Bitcoin. They're related, but they are different. And that's really the point that I was trying to make.
This is really great points, right? We've been talking about this for a little while since the beginning and the onset of COVID. I think we were talking about on Genius Wednesday, what we hypothecated would actually happen. This started obviously in China, and then it went to different countries. Then we could just see the writing on the wall. Wow, the US hub is New York, and New York flies everywhere. So it was just the writing was on the wall. And we knew that, if we kind of emulated a lot of what the measures they implemented in those countries, which are, shut down, obviously, that could have massive implications in terms of how we interact as human beings, how we go about our daily lives. And sure enough, a lot of that came to fruition. Steve and I have been talking about that for a while. And what it did is it accelerated our adoption of utilizing digital goods, digital services more so than ever before in the past. We were already on this trajectory of, this globalized, type of digital adoption, but it accelerated at a clip that I don't think any of us could have expected, which is why I think you're seeing a lot more people open to Bitcoin and cryptocurrencies and things like NFTs, even people like Gary Vee who are like, hey, trading cards, it's like the biggest time ever to sell your traditional physical trading cards. But what he missed was the fact that simultaneously NFTs were born, and those were flourishing in such a way to where it's surpassing that now, or it's going to eventually surpass that of traditional trading cards in collectibles, and I'm very much obviously a part of that industry, as you guys know. And Josh, going back to the layer 2 solution, this is where it plays in, is it really depends on the asset, right? So if it's an NFT asset or if it's an FT, a fungible token, I think it really just depends, because non-fungible tokens and these NFTs, does it make sense to trade one that's $1 and it costs $27 to trade it? No. Yeah. But if you're trading coins, maybe that makes a little bit more sense. So it really depends on the use case. To your point, sidechains, 100% correct. You see things like Flow, which are dominating. NBA Top Shot is killing it. They've made over $50 million now, and they're making $1 to $3 million a day right now. You have Hashmass, that's on ETH. You have CryptoPunks, that one just sold for $738,000 for one CryptoPunk. Do you think that person cared about the gas fee? No. So it really depends on the context and the price of the asset in which you're trading. But I agree generally with what you guys are saying.
Although the interesting thing as we look at it is that's all good as long as the actual Ethereum blockchain continues to function in some way, shape, or form, because if it doesn't, the sidechains collapse with it. Oops.
Yeah. Good point.
Yeah, there's always the apocalypse. We can always point to something.
When is something too big to fail, though? That's the real question. When you have NFTs, DeFi, and everything else that's going on with smart contract protocols on Ethereum? Like, when is it too big to fail? Because so much is relying on it.
I'm so glad you brought that up, because too big to fail is a centralized government concept. It's so funny that, you know, who is saying it's too big to fail? Government's saying it's too big to fail. What are they going to do? They're going to bail it out. What happens if ETH, for instance, if the Ethereum chain became so inefficient that nobody would use it, is that, as David was mentioning before, somebody would have another tech solution that would come in and fill the void. It wouldn't just, like, that's not going to fail because they screwed up the economics and over leveraged and speculated. It would fail because something better is available. So there is no too big to fail in that case, I don't think. David's going to tell me I'm wrong, maybe.
No, I am not going to tell you wrong. It's not too big to fail. It's too distributed to fail.
That would work too.
So Linux is my perfect example.
Mm-hmm.
Linux was an operating system. Someone did it in his spare time. We all know Linus Torvalds, yada, yada, yada. And they competed with Sun, with Scott McNealy, and with Microsoft and IBM, and kicked the crap out of them, to the point where nobody worth their salt does anything on an operating system outside of you know, some of the stuff on the Mac OS and some of the stuff on desktops, but on server side, I don't know of anybody who does something that isn't on a version of Linux operating system. At the end of the day, why is that? That was because there was an army of developers who consistently wanted to make it better. And that's the point. If the Ethereum community is self-sustaining to where it is distributed enough that they will continue to improve it, it will never fail. It might lose use cases to competitors, and it might lose a lot of use cases to competitors. But is there enough to keep it working and to keep it valuable, and to maybe even increase its value even while those other competitors eat their lunch for those types of applications where low gas fees really matter? That's a far more likely evolution. And in the history of markets, we've seen this many, many times. I mean, you know, it is completely a possible outcome that Ethereum will be limited to high value applications. It is also a possibility that they will succeed with proof of stake and with everything that they're doing in the next iteration, to where it will be able to be the global computer used for everything. I don't have an opinion. I'm not smart enough or technical enough to actually understand that. I have guesses, but what I will say is I am more than happy to bet that it will continue to exist, and it will continue to thrive in a certain series of use cases. Whether or not it will grow into, and I happen to be bullish on Ethereum in general, whether it will grow into the market cap that its most, you know, diehard adherents believe it will grow into, that is yet to be told. But the reality is whether the disaster case happens, that's a much lower probability event. Yeah. That's all I would say.
I think that's right. You're reminding me that my father was, I think, literally the last person using Lotus Notes that was supported at that time. He was the one. God bless him. But
all right, guys. So we're gonna wrap this up just here in a second. So we're gonna do something a little bit new, because in my opinion, we could all sit here and anybody in crypto could say, hey, you know, I picked Doge, I picked DOT, I picked Ethereum, whatever. I could say Ethereum, I said, you know, under 100 is a good deal. That's actually better than saying, you know, this could be good one day, right? So let's hold each other to a week, right? What do we think that is interesting to you for, you know, looking at over the next week, right? And then also, what should people generally be looking at in general around the cryptocurrency space this week? What's interesting to you? So one coin that's interesting to you, and one fact or something that people should be considering.
You put it that way, you're asking us to front run against ourselves. I'm not sure how I feel about
it. Yeah, exactly.
I'll say something.
Go ahead. You go first.
It's a couple. The major divergence where precious metals have had as low a volatility over this period, whereas silver's basically been $27 and gold's been between $18 and $18.50. And at one point, I know we did those reports on it, there was a strong correlation, but the crypto market has decoupled, at least temporarily, where its NASDAQ was making all-time highs, but it was on a slope like this. And you've had crypto, so to speak, with, you know, the world's wealthiest man liking two of the top 10 projects. Who would want to bet against them? I mean, I wouldn't. And whether everything else catches up, like do gold, equities, crude, like things, commodities catch up, or is just crypto separating into a non-correlated asset? And for my pick, I hate to say it's not a 1 week pick, but speaking of smart contracts, there was this.
No, Steve. This is 1 week, man. We're gonna check back in next week.
Okay.
We're
All right,
look
we're
at our
here.
picks.
I'll make it a 1 week.
If it was a good pick.
There's a small cap project. I don't know if you remember FLR. It was a fork of, or it was an airdrop from XRP. And it was a smart.
Oh, yeah.
No one really talked about it. Like it seemed to happen right in that dead zone. And I found a small project that actually partnered with them that's already in the masternode and interest bearing space, or rewards bearing space. And I guess and they have a storage system like FIL. So I'm going to go with the small PAC coin, PAC Global. That's my pick.
Okay, there we go. What about you, Josh?
So at the risk of pumping something that I've already been stupid enough not to buy 50% ago, I got to go with the graph. GRT is my call right now. And I'll be perfectly candid in the fact that I do not know myself perfectly well exactly how it functions, but I do know I have some very smart friends who do. And they were in on it early, kind of explained to me the use case to some degree, and the supply and demand dynamics are pretty solid. And lo and behold, the Ethereum thing is up a lot since I decided to be too lazy to get into it.
Coinbase Earn. That's how I got
You know what? I have a philosophical issue with Coinbase. I refuse to open an account.
So many people have an issue with Coinbase in general.
So,
you guys look.
my answer.
Nice.
Back coin.
Nice.
So my answer is a boring one. I actually think that we're probably due for a week or two of breather in this market, because of just the hype cycle tends to go in ebbs and flows, and too many people. I mean, my pool guy is asking me what cryptos to buy, which generally that's indication of a short-term top. It may or may not be.
Yep.
The reality is I'm focused on Bitcoin. I'm also very, very heavily looking at Ethereum, but I'm focused on Bitcoin. I think that we are likely have established in Steve Kwan and I's traderisms, resistance becomes support. I think that the between 42 and 45 is basically becoming a support level, and it will, when that is established and it blows it off, it will make a run to 65. I think 50 is baked in the cake. I think 65 is virtually certain. The fact is that if it happens, then it will outperform the alts during that period of time. If it stays in this sideways consolidation, then you could see some rotation into the more volatile alts, in which case then I would give you a second pick, but you told me I can't. I'll just say that I am very bullish in general on DeFi, and in particular on applications like derivative ones. And one could guess, what kind of derivative DeFi-oriented coin I might be talking about, but it's one that has done well lately. But I do think it's really important to watch this because of all the reasons we said before. If you look at the adoption curve of Bitcoin, the reality is once the enough people believe that that critical mass is guaranteed, then it's a 10x from here. And that 10x is going to happen ludicrously fast. It's going to be much faster than people think. Do I think it's going to happen in the next week? No. Do I think it's going to happen in this year? Actually, no. I do think it will triple from here this year. I think there's a very real shot at that. But I think that people need to understand that this is a unique asset where it's either worth at that level or more, or it's going to fade into history. And I don't believe it's going to fade into history. And so that's why for the next week, I think it's very important with what Tesla did, what Michael Saylor. He had 1,400 companies listening to him, and corporate treasurers are all seeing stock prices ramp if you buy Bitcoin. Well, there's not enough Bitcoin free float on exchanges worldwide to support even 10% of those corporate treasurers buying Bitcoin with 10% of their corporate treasury. There just isn't, not right now. So you could easily see a run. So I think Bitcoin is extremely important to look at right now. I'm not a maximalist necessarily, although I kind of divide it into a Bitcoin zealotry and an appreciation for where the rest of the crypto ecosystem goes. But I think we're at a particularly interesting point, having had this rally, to watch Bitcoin for the next week.
I'm pretty sure that was a long way of saying nothing's happening. Is that what everybody else got out of that?
That's
in the next week.
We got to wrap up here, but I'm gonna say, you know, one thing that you guys can always count on, especially you, the folks that joined us on the live stream, is if you ever want to learn a new vocabulary word, come to Genius Wednesday, because David always has a new one. Zealotry was a new one today, so I really appreciate that, David. I'm gonna go look that up. I'm assuming it has to do with the derivation of zealous. If not, maybe I'll learn something new today.
Zealot's the root. You know,
zealot. Okay, there you go.
We have our lawyer friend who can speak Latin, which I cannot.
There you go. My wife,
that may be
wife
from
took,
Latin. I'm not sure. That's
Latin as well. Yeah, she can. It's pretty insane. So last thing I'll say is I actually agree with you, David. I think it's going to take a breather. I don't think we're going to see what we saw in the past, where we had, you know, the Chinese New Year and all the stuff that's going on typically in, you know, January, February. I don't think we're going to see that. I think there's just too much traction. I think there's too much, too many people that are in the market right now. I'm actually looking for that retracement to come, or that retracement to come, especially in things that rose too quickly, in my opinion. When anything ever rises too quickly, it tends to fall even quicker. So I know that your beloved Doge, you know, personally, I'm short on it, you know, especially as things retract. You know, we've seen that kind of ping pong between, you know, 0.03 to 0.07. So, I mean, for me, that's something I'm keeping an eye on. And then to David's point as well, I mean, Bitcoin, you got to zoom out. This is a long-term play for me. That's how I look at it. This is not a short-term gain, short-term loss kind of situation. This is long-term. Zoom out, look at the stock to flow model. That's something very interesting. If you haven't seen that, typically it's been following pretty well. So, you know, overall, I think there's a very interesting market in front of us right now. Like I've said before, the NFT market is just completely taken off. If you haven't looked into that market, just take a look, dabble, you know, get into one of the projects, buy something. There's a Street Fighter is coming in now. So they have a pack of cards that you can buy in the next week or so. So these large IP holders are seeing the value. To your point, David, there's so many corporations that are just listening in, whether it's to Michael Saylor, or if you guys are familiar with Clubhouse. Clubhouse is a new social media phenomenon. Every big player is in there talking about Bitcoin in some capacity. Even these, you know, famous, you know, hip hop artists to, you know, artists in general are coming in. They're just listening in, they're chatting about it. But the cool thing is that these CEOs and like these people that are at the forefront of crypto, even people like Elon, have been known to join in on Clubhouse and are just having conversations and just using it as a tool to educate people about what the opportunity is. And I see that having a tremendous impact on the acceleration of the adoption. So anyway, with that said,
Jeremy, give me 1 minute. I got to give one plug.
Please.
I have to say the best investment I made this year was actually in the NFT space. I knew this guy who was starting one, and I just looked at the prices, looked at the story. It made sense. And the NFT is called Bitcoin Origins. I'm telling you, I bought some cards for $1 that went for $1,000.
Crazy.
And on the second,
that is pretty crazy.
My last plug is Steve is starting a book and image NFT called Beauty in the Blockchain. And this is a sneak peek at the main character. That is Stephanie. She's our main character. So be on the lookout for Beauty in the
Wow. So Jeremy, your viewership of Genius Wednesdays just like tripled right there. Right. That was it.
We're just going to show that chat at the end. And I think we went from 2 live viewers to 50. That's great. Good job, Steve.
Something like that.
Thank you guys again. Really appreciate it. We're going to check back in on our picks next week to see what happened. But until then, thanks for joining us on Genius Wednesday.